Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of February the 6th, 2017. Now to get started this week we're going to begin where we always do with the very important US dollar index. Now after our non-farm payroll number, in actual fact it was just somewhat of a mediocre number in my respectful opinion. Our U6 number, very important, moving in the wrong direction from 9.2 to 9.4. So it's not overly dollar positive in my respectful opinion. And this is basically confirmed by our VantagePoint software. Now our critical VantagePoint 18-day predicted EMA coming in at 100.54, followed by 100.1 and 99.81. We've closed at 99.84. So the dollar's had a mild recovery off the initial jobs number, but again, when we dig a little bit deeper into that jobs number, it's just okay. So is it enough to make the Fed raise rates in March? Possibly. The other data has been decent. It hasn't been great, but it's been pretty good. So we'll see how this one plays out. Right now, our VantagePoint indicators are somewhat conflicted. Our neural index is up, but our predicted short, medium, and long-term differences are still below the zero line and moving sideways. Our predicted RSI holding below the 40 level and below the 50 level on the predicted RSI at 35.5. So you can see that we've basically just been moving somewhat sideways along here and slowly moving lower since that triple EMA cross from VantagePoint that actually took place back at or about the beginning of January. So not much has really changed here on the dollar, despite what we're hearing. We're hearing a lot of rhetoric from the different, from different websites and everything. Dollar bullish, dollar bearish. It is still a Trump trade here, in my respectful opinion. His Twitter account is certainly dictating a lot of moves currently in the market. So when we get into our Forex pairs, our Euro-US, this is one of the most heavily traded pairs in the Forex. When we look at Euro-US, we have massive trend line resistance right around this 108 area, but our critical vantage point level here comes in at 106.91. VantagePoint still showing somewhat bullish, but sideways. Very much, we're seeing a sideways move here on Euro-US, just like that sideways move on the downside on the US dollar index. So at the current time, we still remain bullish here on the predicted RSI, 67.4. We are not even remotely overbought here, despite what some of our indicators are saying. Now, we don't want a lot of indicators on our screen. We want the most important ones, our crossovers, our predicted RSI, predicted differences, and of course our predicted MACD. So with our predicted MACD above the zero line, the predicted RSI above 60, it actually points to a potential break to the upside on Euro-US, not the downside. So as long as we're above this critical vantage point level here at 106.91, 107.40 and 107.70, the Euro-US does carry somewhat of a bullish tone, and you can see with this close of 107.83, this still points to a potential move higher. We've had a retest here back at the beginning of the week, but the Euro-US, even after the non-farm payroll number on Friday, after the ADP report, after the Fed is very neutral last week. They're not hawkish, they're not dovish. So none of this is really overly bullish for the US dollar. So the euro still holding here, remaining firm in 2017. We are not bearish despite what we're seeing, what we're hearing. The euro-US currently is holding its ground as that dollar index moves lower. Now if we look at the US Swiss franc, we can see that the US Swiss franc is almost identical to the dollar index chart. Now when we look at that dollar index, again, struggling to the downside, struggling to make any significant moves to the upside. US Swiss franc, the same thing. Our critical level here, our VantagePoint 18-day predicted moving average, 1.009, 99.49, and 99.24. Once again, guys, excuse me, here we'll just clean that up a little bit here so everybody can see it. 99.22 is where we've closed below all three of these predicted moving averages. Now, again, our neural index, we can see it's the same as the dollar index, guys. It's pointing up, but the additional indicators are still moving sideways. The predicted MACD pointing lower. Now, our predicted RSI here is starting to rise, so it does give hope for some dollar strength here, but my optimism on that at this current time remains heavily guarded. Now, what we want to look at if we're trading US Swiss franc, keep a very close eye on the equity markets. If the S&P 500 moves higher, if the dollar index moves higher, then of course US Swiss franc will be a fantastic potential buy. But the area that I would really watch this week is right around this 98.80 mark. We can see we have strong trend line support coming in here, so we have demand for this currency. If we have demand, price rises. If this area holds, then we will see US Swiss franc go higher, Euro US lower. But right now, if this area, which appears to be getting ready to break, that would probably send US Swiss franc down a little bit lower before the dollar recovers down towards the 98 level. Now, with Great Britain US this week, very interesting play here. Shorts doing very well up at our swing highs here on our trend line resistance. We are down now testing that key VantagePoint 18-day predicted moving average, 124.71. We're closing exactly on this level here, guys. Now, our indicators from VantagePoint that I talked about last week did come to fruition, where we've got the medium term crossing over the long term predicted difference to the downside. This led to a fairly substantial move down on Great Britain US from that 126.50 area. We can see we have a false break here, which led to this sell-off, but the indicators here, to be clear, from VantagePoint are not confirmed that we are going into a trend reversal back to the downside on this. So be very careful of this particular currency pair while it's above 124, and more importantly, why it's above 124.71. Our indicators here are trying to roll over to the downside. Our predicted RSI is at 49.3. That is not convincing in any particular way that we are going to go down any significant distance. So be careful of this one here. We've got significant support sitting right around this 124.71, 124.50. And until this predicted RSI from VantagePoint breaks down below the 40 level, this all-important 40 level, you can see the last time we had a triple AMA cross right here, combining that with that predicted RSI, that led to a big move to the downside. And case in point here, what I will say is that was right around the 15th of the month. So it is possible we're getting ready to reverse here. We just want to be very, very careful with this one because the indicators are very mixed. But right now, we have had a couple of tests of that VantagePoint 18-day predicted moving average. This is the second test of this area in the last week. We could be getting ready for a break. We've got strong trend line support here. We've closed below this trend line, but the VantagePoint 18-day predicted moving average is holding the pair up. So be careful again of this level to start the week. Now, as we move into the dollar-yen pair, it's going to be a very interesting week for dollar-yen here, guys. The critical levels that I want everybody to be very aware of here, we have massive trend line resistance. Our triple EMA cross from VantagePoint to the downside back at the beginning of January. We've been moving lower since. We've basically paused out here at about the 112 area. Keep an eye on the 112 area right now. Our indicators from VantagePoint are saying we are going lower. We've broken the predicted MACD. Our predicted RSI is below the 40 level. This suggests that we would be looking to sell into the 113.97, 113.32, and potentially even the 112.82 with stops above that 113.97. Now, again, if we lose this very clear and noticeable support here, we could see a big sell-off. Now, just to advise everybody, intermarket correlations, guys, they will trump anything you see on the screen. Elliott wave, Fibonacci, Gann theories, all of these wild and wacky indicators that we try to apply to our trading. This is as simple as this, guys. If this level breaks of 112, it will take the equity markets to move lower. The Nikkei 225, the S&P 500, and we must see gold moving higher. If gold starts moving higher, we're going to see dollar yen crash through the 112 area very quickly. But if gold flattens out on a US dollar recovery, then dollar yen will rise back towards this 113.97. So keep a very close eye on it. But again, these VantagePoint indicators have been incredibly accurate calling the move up. There's no reason to think they wouldn't be the same calling it down. We see a triple EMA cross. the break of the predicted on the predicted RSI of the 60 level, our predicted MACD above the 0 line. You can see we're below the 0 line in this particular case. Our predicted differences in neural index, everything is pointing to a move to the downside. Nothing is 100% in trading, guys, but we can get to about 80% accurate using the VantagePoint. And right now, combining these indicators, it is pointing to a move down. We just need those equities moving lower, and we need gold moving higher. Now, with the US CAD, the US CAD continues to push to the downside. Our critical level here, 131.43, excuse me. I'm going to highlight this right now so everybody can see it. 131.43, 130.76, and 130.34. We've closed at 130.23, below all three of these critical vantage point levels. Our indicators are a little mixed here, and what I'm going to show everybody here for this week to be very, very cautious of, I'm going to drop this down to our 3-month time frame so everybody can see this. This is a classic indicator from VantagePoint here, our medium term crossing over our long-term predicted difference. Now, this is crossing to the upside. What's interesting about this is when we combine this, we also have a new trend line formed. So if I come back to the 6-month time frame here, or the 6-month period, we can assess here that a new trend line support has formed at about 129.80. So as long as we hold above 129.70, 129.50, there could be a long trade coming here, guys, in the early part or mid part of next week. Our indicators are still saying we've got a little bit more downside, but what the area you want to watch this week very closely is the 129.50. We've got this needle in a haystack right here, which is that critical vantage point predicted differences. This is basically telling us the medium-term trend is weakening against the longer-term trend. Now, the longer-term trend is still pointing down, but the medium and shorter term, it is weakening. So be careful of that. What I want you guys to pay attention to next week, light sweet crude oil. If crude fails and starts moving lower, follows the dollar lower, US Canada will rise. So the critical thing that I always point out to my own direct clients, know your levels, guys. That's the critical thing. So as we come into our final two commodity currencies here, Aussie US, New Zealand US, not my favorite pairs, to be perfectly blunt, but you know, they are still money makers, and they are the Aussie, New Zealand high yielders, very, very high yielders. So when we look at this right now, we've got a trend line break that's taken place right here. Great call again from VantagePoint with that triple EMA cross back at about the 6th of January here. We've been moving higher ever since. Aussie US is going to follow gold, guys. As long as gold keeps moving up, Aussie US is going to keep moving up. They had a great trade balance number last week. That pushed the Aussie higher. But again, gold is the real player here that's causing the Aussie to move higher. Now, my concern with Aussie US right now, we've moved up a little bit too fast and a little bit too quick based on that trade balance number, and now we've got into an overbought condition. Now, just because it's overbought doesn't mean it can't move higher, but again, we've got that failure here in the predicted MACD to cross back to the downside. It's still pointing higher. Predicted differences, our neural indexes check. Everything is saying we're going higher, but a little bit of concerned here again. We're closing the week at 76.79. Our key vantage point level 75.35, 76, and 76.47. So keep a close eye on these particular levels, but more importantly, if this is actually a trend reversal back to the upside, a significant move, then we will hold above this trend line breakout area right at 76. This is acting as a critical support. We can see our vantage point level, our 8-day predicted moving, is also sitting at this level at 76. Now, all stops, if we're going long, should be below 75.35, but again, I would watch the 76 level very, very closely for that to hold. If it does, we go higher. Same basically applies. New Zealand here is going to come under pressure though, guys. What I want to point out with Aussie US and New Zealand US is I want to draw everybody's attention to Australia New Zealand. Basically, Australia New Zealand is a synthetic cross pair. It doesn't exist. It's a derivative of Aussie US and New Zealand US. So if Aussie US is screaming higher, chances are Aussie New Zealand is. So in order for people to buy Aussie New Zealand, they have to actually sell New Zealand US. So you can see that New Zealand US, if we're looking at counter trend shorts, this is the one that's favored. And strictly because of that Aussie strength, it's actually holding New Zealand down a bit. So that trend line break on Aussie US. We're not getting that here on New Zealand US. It's paused, and that's why. Now, it doesn't mean we can't go long here, but 72.11 is the critical level. We're closing well above that at 73.11. 72.76 the 8-day, 72.99. We're still bullish on New Zealand here, guys, but be careful of this massive trend line resistance coming in at or about the 73.70 mark. So if we're going to fail, that's where it's going to be. But New Zealand simply could be following, staying behind a little bit on the Aussie rally, and it could recover also. But we're going to need that gold prices moving higher to support both Aussie, New Zealand, and even the CAD dollar to some extent. They're all commodity-based currencies. So as long as we know our levels, we can trade this. But again, our predicted short, medium, and long-term differences kind of now moving sideways and coming down from a slightly overbought condition. It's still managed to rise, but in order for New Zealand US to really start moving, we want a clean break of this trend line, and again, keep a very close eye on those gold prices.